Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. As a real estate investor, price is important. As you become more seasoned, it's not the most important thing, but let's face it, getting started is tough. So today we're going to talk about one of the most affordable markets in America that you can invest in. And we've got a great guest today on the Real Estate Guys radio program.
When the world changes, investing strategy changes too. The coronavirus is disrupting economies, financial systems, and daily life like nothing in modern history. Sheltering in place might protect you from the virus, but a wait-and-see approach to investing now is like pulling the sheets over your head while the house burns down. It's not the time to be complacent. So we're calling our huge network of thought leaders, seasoned investors, and technical experts to find out what they're seeing, thinking, and doing to mitigate risk and capture opportunity, and we're recording all of it. We're calling it our Coronavirus Crisis Investing Webinar, and it's totally free. All you need to do is register. Remember, mainstream media doesn't talk to real estate investors. They don't understand you because Wall Street pays them not to. That's why the real estate guys are here. To register for the Crisis Investing Webinar, simply send an email to crisis@realestateguysradio.com. That's crisis@realestateguysradio.com. Real world wisdom is the best vaccine for a healthy financial future. Send your email to crisis@realestateguysradio.com.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. With me, as usual, it's our co-host and financial strategist, Russell Gregg.
Hey, Robert.
Part of the financial strategy in acquiring real estate has to do with finding markets that make sense. And the big picture is the income has to be enough to cover the expenses and then some. So you look at these markets that have appreciated over time really well, places like Northern California, the Bay Area, Seattle, places that the prices have gone up and up, and yet the rent doesn't always keep pace. Sure, the rent goes up a little, but not enough to make any sense. It typically doesn't make investment sense to buy something in a highly appreciated market, even though you could argue, hey, it's going to go up. It always has. Well, appreciation is one way we make money in real estate, but cash flow is how we hang on to the property. And so, especially if you're starting out, it's like, well, I want to find a good market where prices are good and they're affordable, but the rents are strong. That's what we're going to have today for you.
Yeah, we spend a lot of time looking at the macro picture, trying to figure out where money, people, jobs are going to flow in or out of. And that's kind of the backdrop. And then once you figure that out and you start saying, okay, what's going on in the macro? Well, I think we all know that as we're sitting here in 2020, in the latter part of 2020, that we are on probably the front end or in the middle of the beginning of a pretty severe economic setback. Inflation is starting to show up. The Fed has said, hey, we're about inflation, and that's going to victimize people who are living paycheck to paycheck, which is your typical tenant. It's going to make living less affordable. And as people try to find a way to maintain a quality of life, to put a decent roof over their head, to be in a decent community, they're going to have to move around. It happens within metros. It happens within product types, and it happens, between states. People will move from place to place. And so when we look around, we look for where are the conditions good that are near large major population centers that is probably going to attract people from those large centers into the more affordable marketplaces.
Many years ago, for real estate trivia, we asked what the most affordable market was in America. And it actually is the same answer today, and that is Indianapolis, Indiana. And by affordability, what we were talking about is where somebody can purchase a home and have the same utility and quality for the lowest price compared to what the average wage is. So the best place people could buy a home back a dozen years ago, Indianapolis. Well, that doesn't necessarily mean it's a great rental market, because if everybody can buy a home, then is there room for renters? Well, what we've discovered is in that market, just like in most places, people at lower incomes typically don't have the discipline or the ability to save up the 20% or more down payment it takes. And so it's a market where we see a lot of renters, and that's great for landlords. It also happens to be the neighbor of large markets that react differently than it does. And our guests will get into that. But I think if you're looking for a place to buy an inexpensive property where the returns are going to be good, this is certainly a good place to start.
Yeah, so everybody has to get started someplace. And just because it's a great starter market and a great starter price point doesn't mean it has to be the end, right? There are people who build entire portfolios, 10, 20, 30, 40, 50 of these, what I call appetizer properties. And they start out using conventional financing. And then when they get a collection of them, through our friend Billy Brown and people like that, they come in and they refinance the whole portfolio with a commercial loan and pull the equity out and go double down. So there, you can still play sophisticated financial equity management games, even with these small properties, if you just go about it right. But whether you're just beginning or whether you're building out a big portfolio looking for cash flows, this is probably a market you're going to want to pay attention to.
Our premise is you can't know and work in too many markets very effectively. Typically 4, 6, maybe 8 markets, and that's about how many markets any one investor can truly have their arms around. Now, it's different if you're passively investing, but if you're actively investing and you're going to go to the market, you're going to meet service providers, you're going to figure that all out, it takes some time. The real estate guys are in about 6 or 8 markets, and this is one of the markets that we proactively looked for. We have a good friend who's lived in Indianapolis for many, many years, and when we were visiting there last, we're like, man, this place is just, it's clean, it's nice, the houses are so affordable. You know, they got a major sports team. I mean, it's the home of the largest sporting event of the world. I mean, this is a place to consider, and we went on a quest, and that led us to our guest today. When we come back, you're going to meet Jeff Schechter from Indianapolis, Indiana, on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you want to learn how you could potentially increase your net worth by over $1 million and quit your job in just a few short years, listen closely for the next 60 seconds. This is Brad Sumrock, and over the past 16 years, I've helped thousands of people invest profitably in real estate, but not just any type of real estate. I specialize in helping people syndicate large apartment buildings so that they can be business owners and investors. In today's competitive environment, it's even more important than ever to leverage an experienced mentor, invest in your education, and have a team of advisors that has established relationships nationwide. And so many people right now seem to be struggling to find deals and then get them funded, but yet Sumrock students are thriving in today's marketplace. We've purchased nearly 7,000 units and nearly $1.5 billion in purchase volume over the past 12 months. And with the new Trump tax laws, apartment investors are positioned now better than ever before to pay even less in taxes. To find out more, send an email to apartmentsnow@realestateguysradio.com and you'll get my recent presentation called Why Apartments Now. That's apartmentsnow@realestateguysradio.com.
Hear ye, hear ye. Registration is now open for the Real Estate Guys 19th Annual Investor Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year are sales legend Tom Hopkins, the editor of the Gold newsletter Brian London, international real estate developer Beth Clifford, and Jim Rohn's 18-year business partner Kyle Wilson. And joining us live and in person for his 9th Investor Summit, Peter Schiff. Plus, returning for his 9th Investor Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. Plus, lots more to be announced. It all begins June 11th in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Summit and make plans to spend a week with the Real Estate Guys, Peter Schiff, Ken McElroy, and an all-star faculty on the 19th Annual Investor Summit.
Hi, this is Kendra Todd, winner of The Apprentice, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station, all the time at realestateguysradio.com, and we're talking about affordability. One of those difficult things sometimes is to find real estate that works. Obviously, the numbers have to make sense, but when you're starting out especially, it's just a lot of money for real estate, and there's markets around the world that just are expensive. On the other side, though, there are some great markets that have historically been affordable, and we're going to talk about one of those markets today. Joining us from Indianapolis, let's say hello to Jeff Schechter, who goes by Shecky. Hey, Shecky, how are you?
I'm doing well. Thank you very much for having me.
Well, hey, the big question is, how are things going in Indianapolis?
I mean, they're going well. Lease-ups happen fast. Crews are busy. You know, it's we're definitely seeing a little bit of upward price pressure during this COVID situation. Like inventory is pretty tight, but we're doing well. Our investors are doing well. People are making money, so it's good.
Excellent. Well, I always think of Indianapolis as one of those great bread and butter markets. And I know for years it was the most affordable MSA in terms of how far your money went. And that was good and bad. Part of that was, well, folks can afford a home. But as we know, in every marketplace, there's people based on where they are in their career or whether or not they're a contractor versus having a job, they need to rent. Who are the renters in your market?
Well, certainly lower income people. I would say, we tend to operate in C-class neighborhoods where people are not super wealthy. But we see a lot of like Uber drivers and service workers, bartenders, waiters, waitresses. It's kind of a pretty big, we get a lot of them that like work at places like Walmart and things like that too. So, these are not necessarily high enders in terms of income, but they're solid working individuals.
Well, sure. And I mean, that's really the kind of the fabric of society, if you will. And we always talk about this recession resistant price point for the rents where, when times are good, when times are bad, people need a roof over their head. How has COVID impacted that just in terms of jobs and folks paying their rent and those kinds of things?
Well, like a lot of other markets, I think there were some pretty, I guess I would say, negative implications to lockdowns in terms of courts being closed and things like that. So, there's always going to be an element of tenants in any property class that are going to take advantages of those sort of situations. Like, for example, here courts have been closed for 3 or 4 months and they just reopened the other day. So obviously there's this huge backlog in terms of evictions, things like that. For us, we have been, I guess, partially fortunate, partially smart, partially blessed in that we've placed a lot of our own tenants and have had existing relationships with them. And we've seen very, very little fallout from people in terms of just saying, hey, I'm just going to opt out of paying rent and play the legal game here as long as I can. Fortunately, we've been in a situation where most people have paid. And the ones that have really been struggling to pay were communicative and said, hey, look, I'm a little bit late. I'm a little bit behind. Can you work with me? And of course we did. And for the most part, we really have not too many bruises, let's just say. I wouldn't say it's been perfect. We're not in a perfect business to begin with. But then you factor all this in too, and it's going to create a situation where it's going to add more imperfections, let's just say. But we've been doing all right. We're collecting most of the rent and moving along. It's obviously not quite as good a returns as we would like, but we're still doing well.
Well, I'm glad you bring that up because in every market there are challenges. But when your tenant actually does lose their job, I mean, that's a reality. So you can, just fire off an eviction notice, or you can work with the person and, try to continue this long-term relationship you have. And that brings up another point, which is just helping folks to understand the market. Indianapolis is a pretty big market. How big of an area do you guys work in?
We tend to operate, if you know Indianapolis, we tend to operate more in the inner city. And we do that by choice. Indianapolis is a big MSA. It's about 2 million people, and it comprises 11 counties.
Okay.
So in terms of square mileage, we're one of probably the biggest MSAs in the country.
Yeah.
You can drive forever and still be, quote unquote, in Indianapolis. But in the inner city is where we're seeing all of the gentrification. So, I think there's a certain amount of stability and, nice, easy life farther out in the suburbs, but we don't see a lot of changes and we don't see a lot of, improved values or improved rents and things like that. In the inner city, we do see quite a bit of change. And Indianapolis over the last few years has been going through quite a renaissance. So we're seeing a lot of really great, like old commercial buildings being changed over to different use. We're seeing new apartments going up. We're seeing a lot of those old beat up homes being redone. I'm in one myself. I live and work from home. And so it's really, really cool to see what's going on. And one of the reasons that we chose to be more in the inner city is because we're trying to play off of that Renaissance type activity. In other words, obviously we can't go into a neighborhood that is already gentrified, because then, your price points versus the rent typically don't work.
Yep.
However, we can be right next door. We can be in the next neighborhood over. And, especially when we start seeing a little bit of trickle on the edge of that neighborhood, we know, like, hey, it may still be nothing special for the next 4, 5, 6 years. But, 7 years from now, 8 years from now, we're playing a long-term game anyway. So that's why we like to do that stuff. And we tend to move into more of the older properties, because that's where there's more character. And those are the kinds of properties that they're harder to replicate. You can build a box out in the suburbs and it looks fine and it's nice, but it doesn't have the same amount of character. So they're not building stuff like that anymore. So we like to be involved in structures that do have some character, so that when we hold them for a long period of time, they have at least a greater opportunity to appreciate.
Well, and it's also a proven market. And you hit on something that's super important, Shecky, and that is just how critical it is that you have boots on the ground, that you have somebody you work with that really knows the market. If I were to drop into Indianapolis today, I'm sure I could probably identify some of these gentrified areas, but I'm not going to have the market knowledge to know where that line is and what's close enough to have a positive effect, but, versus something that's not close enough. So having that local market knowledge is huge. And you guys have been in the area quite a while. Talk about what you've seen happen over the last few years in terms of things like we haven't talked about in your market, like appreciation.
Yeah, so our business has been open exactly 4 years. 4 years ago when we started, I did not know the city nearly as well as I do now, obviously. But there were areas that I felt scared to go into.
Yeah.
I'm scared. Too much crime, a lot of real, I would just call like urban blight. And we don't really see any of that anymore. Now, that's not to say there aren't boarded up houses. And there's not to say that there's no crime in Indianapolis. Look, I don't want to paint, too rosy of a picture for the listeners.
Right.
What I am saying is that there's been this, because of the Renaissance that we've gone through, there's been enough bleed over of this improvement, street by street, house by house, that we don't see any areas where there's like, oh my God, that's just like a bad neighborhood, don't even go in there after dark. We just don't have any of that anymore. There's still crime going on everywhere, but it's a lot of a easier, softer place to be now, and with a lot of promise. So of course, like to your point, that does bring up some room for appreciation. Indy, the first couple of years that I was here, I've been here the entire 4 years that we've been in operation. That's what caused me to move here. And the first couple of years, we didn't really see much appreciation at all. And that was consistent with many, many years of Indianapolis's history, going all the way back to the crash of 08 and 09.
Right.
And so it's been a fairly, fairly flat. But the last couple of years, especially in certain areas, we've seen some pretty significant appreciation. And whereas that is exciting in terms of the stuff that you are holding, as you can imagine, it's also a double-edged sword, because, we're trying to do the best job that we can to buy and rehab a property and get a tenant in there and get that thing performing, whether that's for ourselves or for our investors. And the more that the price pressure happens, the harder it is to make the price to rent ratios work. I can honestly say we have not yet seen any significant rent increases that would match those price increases. So, we're fighting a numbers battle there right now. I'm not saying we're not winning the battle. I'm just saying our pencils have to be extremely sharp. And there is not nearly as much room for error as when we got started 3-4 years ago. Back then, it was like, all right, well, we missed this thing, needed a roof, whatever. All right, it's another $6-7 grand, $8 grand, whatever. We'll make it work. Now there's no way. Like, we cannot make those mistakes anymore. And so we've Had some deals where we didn't do as well as we would have liked to. But we've also gotten a lot smarter too. And so, again, that's also a mixed blessing. So, I think we're a better resource for investors now than we ever were, but we're also smarter and have to work our butts off much harder now too to bring that same product to the investor.
Well, we've heard this story before. When you have to start sharpening your pencil, it's actually usually a sign that the market is doing well and on the verge of doing well. So it's not all bad, but it is tough sometimes as the operator to make sure that you've got the margin that's necessary to deliver something to an investor that's going to make sense for them. And, the premise of the show today is about an affordable market. Let's just give the listeners an idea of what a typical house might cost, an investment property, and what it might rent for. We have listeners around the country and in over 190 countries. So some people think that $200,000 is cheap. Some people think it's a lot. Talk about your typical investment.
Yeah, I think when most people hear my numbers, they get very, very excited. But we've got stuff right now. Well, I got one property right now is under $50,000.
That's for the whole house?
The whole house. Yeah, includes the roof and the carpet and
Crazy.
The heating and everything. So no, it's a very, very small 2-bedroom, 1-bath single. It's rented. I want to say the rent's probably in the low 600s. So, in terms of if you just looked at price to rent ratios and you talked about the 1% rule, just as a general ballpark, I think that thing's probably going to be about 1.2, 1.3, which is fairly typical for us. Most of the sweet spot of what we do would be probably in the 60 to high 70s in terms of single family homes, 3 bedrooms, 4-bath or 4-bedroom homes. We do some duplexes too. And again, depending on neighborhoods and things like that, we have sold stuff as high as maybe $120,000, $130,000. But the sweet spot, the meat of the bell curve, I would say is right at around $65,000, $70,000.
Okay, so that's pretty darn affordable. Now, given the 4 years you've been in the business, does everybody buy with financing? Do you have cash buyers in those price ranges?
Well, when we started, we were doing all cash. And one of the reasons that we did that was because almost every sort of traditional upfront lender has got a $75,000 minimum.
Yep.
So, as you can imagine, obviously you've got a $60,000, $70,000 property. There's no room for down payment and then to leave over a $75,000 note. It's just not possible.
Right.
So we had plenty of investors, and they still do that now, is they'll come in with cash and then they'll turn around and do a cash out refi for the less expensive properties, for the ones that don't, qualify for traditional lending. About a year ago, we made some bigger change, and we were starting to see that investors needed more help. So we actually were able to bring in a preferred lender that'll actually do some of the smaller deals. And the way the numbers worked out, I think the last time I looked, we have to be at about like 58.3 as a selling price or higher, another to meet their minimum benchmarks, things like that. But they're real great. They're not obviously a traditional lender, but they get stuff done for most of our investors, and they're priced right, they're fair, and they do a really, really great job for us. But obviously, as you get more into that $90,000, $100,000, $110,000 price point, which is again kind of the higher backside of our bell curve, then there's situations where we actually can accept upfront financing. And, again, obviously that's a whole nother educational piece there too, but depends on how the investor's structured. Are they doing it in their own name? Are they doing a Fannie Freddie? Are they doing it in an LLC? Are they doing it as part of a portfolio loan? I mean, there's a million questions there that need to be answered, but suffice it to say, for most situations, when we get into that higher price property, yes, we can look at upfront lending outside of our own preferred lender.
Now, Shecky, when it comes to rehabbing these properties, how is it that you decide what needs to be done, what's going to be the most attractive to tenants, what might have the best wear and tear factor, those kinds of things?
That's actually become the easiest part of our job. So we have an acquisition crew, and we meet every week and we look at what's available and what we can make offers on and all the relationships that we've built out there for the last few years. And as you can imagine, in some of the more, I'll use the word distressed properties, because that's where the opportunities lie.
Sure.
they can be pretty darn distressed. And so, you start looking at some pretty significant rehab. So we have 3 or 4 crews that we've developed, but the crew chief is really good about going in and giving us what we would call our pre-scope. And so we get a very, very good idea of what it's going to take to bring that property to our rental standards. And our rental standards, again, we're not trying to turn this property into the Taj Mahal. We're trying to turn it into a solid performer. So when I say standards, I'm talking about the big things, roof, foundation, electrical, plumbing, all the things that are going to be big expenses if they go bad down the road. Like, are those things all solid? And then from a cosmetic standpoint, what are we putting into that property to make sure that it's going to give us the most wear and tear? So for example, we do very little carpeting anymore. We do most all that, luxury vinyl plank stuff, that kind of fake woody looking stuff. Because it wears well. And if you spill on it, stain it, dog scratch it, whatever, if it gets real bad, you can pull out one plank and put in a new one. And you're not, having to replace the entire home worth of carpeting, things like that. So, so we do have a certain color schemes and materials and things that we like to use for finish out. And again, nothing fancy, it's builder's grade cabinetry in the kitchen. It's fairly basic, the little, box style vanities in the bathroom, but for a C-class renter, it's perfect and it works really, really well. And, we buy a lot of stuff in bulk too. And so that saves us some money too. And, but so that's the easy part. And then when we go into rehab a property, essentially our crews are just following a checklist. So, we're taking that original scope and we're just going, hey, we know it needs this, 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 and this. However, when you marry it to this checklist, here's the other things you need to check to get everything perfect and rent ready, boom. And then when it gets turned over to our property management team, there's really very little issues. Every once in a while they may run into a door that doesn't open and close correctly, but we've got a really, really solid property at that point. And, and then from a standpoint of proof, because obviously we do not just keep them for ourselves, but we sell them to investors all over the world. We then bring in a third-party inspector, not us, not anybody related to us. It's a licensed third-party inspector, and we go rake the property over the coals with a fine-tooth comb and give us the inspection report. And so then we have that, and we have a reference point to say, are there any little minor items that still need to be corrected? Let's go ahead and take care of those right now. So all that's done actually prior to the tenant going in. Because once a tenant goes in, as you can imagine, it gets really difficult to get a good inspection. The tenants aren't necessarily cooperative. They've got their stuff everywhere, and it really gets in the way of getting a good inspection. So we're trying to get a clean one prior to placing a tenant, and that seems to have worked really well for us.
Our guest today is Jeff Schechter. He is with High Return Real Estate in Indianapolis, a very affordable market. We'll have more from Shecky when we come back. Plus, we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
In uncertain times like this, it's great to know there are 2 things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com.
Hi, this is Tom Wheelwright, best-selling author of Tax-Free Wealth, and you're listening to Real Estate Guys Radio.
Welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. There's a bunch of cool events coming up that the Real Estate Guys are hosting and are attending, some virtual, some actually live. If you want to find out where the Real Estate Guys will be, just go to our website at realestateguysradio.com and click the button that says Events. We're talking about finding low maintenance and high returns in affordable Indianapolis. And before we get back to our interview with Shecky, it's time to play real estate trivia. That's your chance to win a prize by knowing today's real estate trivia question. In just a minute, I'll give you the question, and of course it's going to have something to do with Indianapolis. As soon as you think you know the answer, you send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, the answer to the question, and your physical mailing address. If you're the winner, that means you're the first person with the right answer. You're going to get the brand new book, Success Habits of Super Achievers. Big thanks to all of our listeners who purchased that book last week. Our friend Kyle Wilson was on the show talking about success habits, and we mentioned the book, and in fact gave away a copy last week. Here was last week's trivia question. Which country has the largest Arabic-speaking population in the world? Well, lots of folks knew it was Egypt, followed by Morocco and Algeria. Here's our real estate trivia question for this week. As you may know, Indianapolis is the largest city in the state of Indiana, and it's also the state capital. But it wasn't always. Name the previous state capital of Indiana. Yeah, before it was Indianapolis, a different city was the state capital of Indiana. If you know, or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Include your name, your guess, and your mailing address. First person that gets it right gets Success Habits of Super Achievers. That's today's real estate trivia question. We're talking about the market of Indianapolis, one of the most affordable markets in the United States. And Jeff Shecky, we call him, is our guest today from High Return Real Estate. And, you know, one of the questions that people always ask, especially if it's a new market, is tenant-landlord law. Is it more tenant-friendly? Is it more landlord-friendly? What can you tell us about Indianapolis?
That was actually one of the reasons why we started our company here. It wasn't just that we had a great market, but the landlord laws here are very, very favorable. Just to give you an example, I mean, our neighboring state is Illinois.
Yeah.
And so there's a lot of investors that come here because we're a short drive away and they can come and look and see what's going on. But as soon as you drive over that state line, things get pretty different.
Yeah.
But we can, for example, for a tenant that's not paying and doesn't have any excuse for not paying, we can get them out really in as little as 30 days.
Wow.
And compare that to a lot of other states in America. And that's a pretty big deal if you're, it's obviously every month that you're without rent and that you can't have revenue, it, becomes very, very damaging to your expected returns. So we really like it here, and we've, got a great property management team and, good attorneys when we need them, and we're able to get stuff done pretty quickly.
Well, let's talk about the property management solution, because especially for folks that haven't had a long distance rental before, it is the make or break, the most critical team member, and often the least appreciated team member, the property manager. Talk about that side of the business and what you've done to find great property management.
Well, so we have an interesting history. We started off really just bolting on to another company that was supposedly a turnkey company, but they were just doing so many things wrong that we couldn't put our name to it. So by hook or by crook, we were actually forced to go into the property management business. So we learned that business really well. And, honestly, Robert, if I'm being transparent, it sucked.
Yeah.
I mean, I hated it. And it's a really, really difficult part of the business. And the biggest lesson that we got out of that, because at the time, I think we were managing, maybe 250, 300 doors. It wasn't this gargantuan portfolio. It felt to me when I looked at the numbers that unless you get to about 1,800 or 2,000 doors, you don't really have enough economies of scale to manage that tenant base correctly. And what I mean by that is there's not enough revenue coming in to do all this cool things that you want to do in terms of collection technologies and boots on the ground and all the maintenance and all the things that you want to do. So you're kind of forced to operate as a smaller company, and people are wearing 53 different hats, and it just is really, really difficult, and it's not profitable. So obviously as a turnkey company, we were in a situation where we were saying, okay, well, our property management division is losing money for the sake of making money on, turning over a property on a one-time sale to an investor.
Yep.
And I just looked at it and said, I don't want to be in this business anymore for two reasons. One, it's not profitable for me as a business owner. And number two is now I'm forced into, if I'm going to survive, I'm going to have to charge the investor more money for this property to offset my loss on the PM side, which, by the way, is how a lot of turnkeys operate. I know how this works. I've seen the underbelly, the ugly of the inside. So I'm sorry for shedding all the light on the dark shadows here, but that's kind of what goes on in our industry.
No, that's great. Actually, I appreciate your candor there, because it is one of the challenges. And I tell you what, we've got blessed to have dozens of really great property managers in our network around the world, but they're the exception, not the rule. It is a low margin business. It's a terrible business. And as you mentioned, the way to make it work is to have scale, which is huge, to have great operations and systems.
Yep.
And then the managers that do well, they're just wired for it. God bless them. I mean, the great property manager is so hard to find, but it sounds like you guys finally have stumbled on a good solution.
Well, so what we did was we just looked around. We looked around the entire country, and I did not think that a company like this would have existed, but we ended up aligning ourselves with a fairly new national company that actually wrote their own software. They're more of a tech company is how they started, and they saw a lot of the issues that were happening in the property management world. As we all know, there's some big challenges there. And they just did a very good job solving them with technology. So we've actually integrated a lot of the stuff that we do with what they do. And it's been really, really great. And I sleep really well at night. And again, because they're in, I think, 14 different markets now, there's some really, really great economies of scale that they have and systems that they have and investor portals and all that I now don't have to feel like as a business owner, I've got to, charge somebody more money just to cover my butt on the PM side, right? I can still put an investor in a really great property for a really great price and still give them a fantastic solution for property management and introduce them to people that are really the best at what they do. And because honestly, I'm good, but I'm only good at a couple things. And I don't, it's like, I don't want to be good at everything. It clearly, our team was not that great at property management. And so we just said, okay, let's be smart about this.
Yeah, that's awesome. Now, let's talk about this. When you do have a property that makes sense and you've identified it and you've been able to get that property, you're starting the process. At what point do you bring the investor in? Is it once it's done and tenanted and ready, or is it prior to that? How does that process work?
We typically, as a turnkey company, we do not bring an investor in until we have a finished property.
Okay.
We're going through all of our checklists. We're taking all the risk. We're buying the property. We're making sure that it's the right one. We're making sure that it's something that will perform well, be profitable, whatever. And honestly, there's kind of a misnomer out there that some investors tend to think that the owners of the turnkey company are cherry picking the best property. And actually the opposite is true.
It's the other way around.
It's the other way around, because what ends up happening is I can't put, my business partner, when I say we can't put our name to a property that isn't like solid and performing. And some of those we end up just having to keep for ourselves because we just don't feel good enough about putting it out there into investor land. Yeah, once it's done and gone through its final checklist and likely already performing, there's been a couple of exceptions where investors that have worked with us before know like, hey, this thing's going to get tenanted any day. And they're so like, I'll just pick it up and, you wait a few days or whatever it is. But for the most part, they're tenanted and performing.
Excellent. Well, hey, I'm sure folks have probably more questions we have time to cover today. And if you've not really taken a look at this market, there is a lot to learn. And Shecky's put together a really cool report that is going to be made available to you at no cost. So tell us about the thing you put together and what folks are going to learn.
Well, it's a really sexy PDF.
Right on.
And it's easy to read. I mean, it's not one of these 400 pagers. We tried to keep it down. I want to say it's 15 or 18 pages. But we wanted to look and say, okay, what are the things that make for a good investing environment? What are the main employers? What are the main types of industry that's, what's fueling the economy? What's the cost of living like? What is it like living in a place like this? Why would investors be attracted to a certain market? Why would, again, you brought up one of the other things, tenant-landlord laws, things like that. So we try to cover all the bases. I want to say we had about 8 or 10 different categories that we talked about that would speak to all of this. And I think it turned out nice. I mean, we send it to really any investor that is considering one of our properties, and we found it to be a really, really great piece just to help them really understand the landscape of what's going on in Indianapolis.
Awesome. Well, before we're done, we'll let the listeners know how they can get a copy of it. Shecky, in a way, you really put your money where your mouth is, meaning that you specifically moved to this market because of the reasons that make it a great investment market.
Yep. I was living in Austin, Texas, and I love Austin, and it's a great city, but completely different market there. There is huge expense and huge appreciation, but non-affordability. I mean, it's a very, very difficult place to own a rental property. And we're here, it's like there's plenty of great opportunities here.
All right. Well, good stuff. We appreciate the time. Hey, before we get you out of here, you have a podcast. Talk about the High Return Real Estate Podcast.
We are, it's just Jack is my business partner, and he's been on a few of the episodes with me, but we have a show called the High Return Real Estate Show, and, great name, obviously. Like you, we believe in education, and we're just trying to bring on guests that will illuminate more, typically more of the buy and hold stuff, but we stray away from that stuff too. And it's really just a way to get more good information out there. It's good. It's generated some really, really great questions. And, we've had some investors that have found their way to us because of that podcast. But as you know, I mean, you do this. It's like one of the more fun parts of my job, just getting to connect with other like-minded individuals. And it's the best part of what I do. So I don't think I'm ever going to give that up anytime soon.
All right. Good stuff. Well, hey, we sure appreciate you empowering us to understand more about Indianapolis. And again, when we come back, we'll tell folks how they get a copy of your report. Thanks for being on the show today, Shecky.
Thanks for having me, Robert.
You're tuned to the Real Estate Guys radio program. More we come back. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, it's Gene from the Residential Assisted Living Academy. The silver tsunami of seniors is coming. You've been hearing me tell you about that for years now on the Real Estate Guys, and it's true. With everything that's going on in our world today, the safest place for a senior to be is a residential assisted living facility. The best place to be for cash flowing real estate in the current economy is residential assisted living. I've been telling you about it. The silver tsunami is here. But if you'd like to learn more, be educated, and get the information that can really propel you into the future, I'd love to share that with you.
To gain access to an informational webinar presented by certified financial planner and real estate entrepreneur Gene Garino, and discover how you can turn a nice home in a nice neighborhood into a cash flow machine, send an email to ALF, A-L-F, at realestateguysradio.com. That's ALF at realestateguysradio.com.
Don't be like Charlie, who scans the internet for IRA information, often getting bad information from copycats who have no idea what they're doing. You deserve to work with a reputable firm that specializes in one thing, the EQRP. Lucky for you, Congress just made it possible for you to get up to $200,000 out of your current 401k or TSP, so you can invest that money in real estate or even your own business. Even if you're still working, it's possible to get access to all this money tax-free. Whether you're a full-time investor, a doctor, or a government employee, even if you have employees, the EQRP is your secret weapon. You'll never see this strategy in Money Magazine, only here with the Real Estate Guys. Every major accounting firm in America is quietly sharing this strategy with their wealthy clients, helping them get their funds freed from 401k jail. Hi, I'm Damian Lupo, and we have your solution. With the CARES Act expiring soon, this strategy will be gone forever. The EQRP company is ready to help you unleash your retirement funds now. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report today.
Hey, this is John Asraf, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Coming up, it's the longest running investment show in the United States. The New Orleans Investment Conference is taking place in October, all virtual. You can get the details on our website at realestateguysradio.com under events. Last few years, we've done a live suite party on Friday night. Well, it's no different. The Real Estate Guys have been asked to host the party Friday night, so you'll still have the party from the comfort of your own living room. Go to the website and get signed up. It's going to be extraordinary. We're talking today about the city of Indianapolis and where the opportunities are. And oh my gosh, that guy knows a lot about real estate and about Indianapolis. Good to hear from Jeff Schechter.
Yeah, it's really fun because, the story is, the way it worked out is, I'm sitting here doing all my clues in the news and market analytics and whatnot, trying to figure out. And I thought, gosh, we really need to find a boots on the ground team in Indianapolis. That just is such a market that's well positioned. And so we tasked the team with finding somebody that had a good reputation, that was active in the business. And they brought Shecky to us. And we spent some time getting to know him and hearing what he was all about. And you can tell he's just a down-to-earth guy. He's a straightforward guy. He's a straight shooter. I appreciate people that believe in what they do, but sometimes I get a little leery when it's all good, when it's all hope, it's optimism, it's all sunshine, unicorns, and lollipops. And it's like, okay, when he talked about, hey, I was in the property management business, and to be candid, I hated it. I get that, right? I mean, if you can find somebody that loves to manage C-class property, marry them, right? Because that is just such a rare find. But when you can, when you know what you're good at and you're willing to admit what you're good at and stay focused on it, and you learn quickly what you're not good at and get out of it, and then choose to align yourself with people who are really good at it, that's the key. That's the secret sauce. And so that's what I heard him talking about. And that's exactly the kind of people we look to work with.
It's reality based, and there's a lot of fluff out there in real estate education. You go to one of those seminars or online events where they're flashing the checks and showing you how much money they're making on every deal. And sometimes that's true, and sometimes that's great, but there's the other side. And so you got to go in eyes wide open. When you're dealing in the lower end of the rental range in any market, you're going to have challenges. And so property management is critical. Hats off to them for figuring out, hey, we don't have to be the experts in this area. We know what we want because we've done it ourselves. Now we can find somebody that delivers results, and that's what it takes. You need super effectiveness and efficiency in property management. And as I said in the interview, God bless property managers. They're just the hardest working folks in real estate, and they do the job that has to be done. It's where all the magic happens. We can do all the performers we want. We can look at all the property we want. We can have the most beautiful rehabs in the world. If nobody is actually connecting the property to a living, breathing tenant, there is no cash flow.
Yeah. And the thing is that's what he was talking about is just, that's especially true when you're in the lower end. When you're down in the B-C property range, I mean, it takes a real special skill set to be good at that. One of the other things I thought was really interesting, Victor Menashe is the guy that has taught us this, is this concept of moving the line, of recognizing where the gentrification is occurring and getting right up next to it, but not crossing over to where the price points have already made the purchase maybe not make as much sense. And then what Victor calls move the line, and what Shecky was talking about, let the line come to you. But however you get there, you're getting up close to where the neighborhoods are turning. And if you really know your marketplaces, you can see the trend. And I do think, on the macro level, as we talked about at the top of the show, we've got an environment where there are a lot of people up in the Illinois area in particular, but other parts of the Midwest that are going to be looking for more affordable housing. Still wanting all the quality of life amenities, big metro, things to do, sports teams, medical, education. Indy checks all those boxes. And so on the macro, as we talked about, it kind of classifies as an affordable market. But then when you take that gentrification concept down to the street level, the same principle applies. You can get affordable right next to where it's become unaffordable and let that wave of unaffordability bring you up a little bit.
If you'd like to know more about this amazing market, all you have to do is send an email to Indy, I-N-D-Y, Indy at realestateguysradio.com to get Shecky's report. He's got a lot of great details in there, and you also get his contact information. What's astonishing to me is the affordability, not only for the tenants, but for the landlords. These are properties that are very inexpensive, and yet, happily, you can get loans on these properties. You can use leverage. You can take advantage of the tax benefits, but you got to get to know the market first. You can start with his free report, Indy at realestateguysradio.com. Hey, guess what? Registration is open for the 19th Annual Investor Summit. It's going to be like no other summit we've done. This last year of 2020, we had to kind of kibosh the summit. The cruise line canceled, the hotel canceled. We didn't cancel, though. We had 3 amazing days with our incredible faculty, and they are more pumped up than ever to meet face-to-face, and that's what we're going to do. So you can get all the details on our website at realestateguysradio.com under the button that says Investor Summit, but it will be epic.
Yeah, well, there's a lot to talk about. We don't know what the world is going to look like in June of 2021, but we know that it's probably going to look a lot different than it's been, and we know that a lot of the changes that are happening are still rolling out. So it's probably, and we say this every year because there's always change, but really this has been the most epic amount of change that I've ever seen in my life. And there's so many things to navigate. There's no better time to get that big 360. If you enjoyed the Crisis Investing webinar series with all those big brains talking, imagine doing that for a week. Right? Peter Schiff's videos got like 600,000-700,000 views, whatever it is. It's ridiculous, right? Imagine being able to spend a bunch of time with Peter Schiff or watching Peter Schiff and Kenny McElroy go back and forth. I mean, it's going to be an amazing time. You'll learn more in a week and do more in terms of strategic networking and building relationships and deepening your understanding about the big picture and how to get things done at the practical, tactical level at the Investor Summit than probably in 10 years of doing anything else you can think of.
We polled many of our faculty and summiteers, and we all came to the conclusion that we're not quite ready to get back on a cruise ship, and that's the different part. We're going to do the 19th Annual Investor Summit on the sand. Get all the details at realestateguysradio.com and claim your space. Hey, if you have a question for the Real Estate Guys, next week it's another edition of Ask the Guys. All you have to do is go to the website at realestateguysradio.com and click the button that says Ask the Guys. If you have a burning question on real estate, we would love to answer that, and your great questions will make an awesome show next week. Thanks to Jeff Shecker for being on the program today and sharing his knowledge of Indianapolis. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.